This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Wednesday morning, middle of the week. I'm Prashant. With me, my colleagues Sonia and Nigel. Hi, good morning.
Hi, good morning, Prashant. Morning, Nigel. And yesterday, what a knockout performance from Maxwell. I mean, it was really something else, right, what we saw on the field. And, you know, I don't know if you guys know this, but Maxwell actually had a bout with depression and anxiety many years in the past. And he's come out of that with so much glory, and the kind of performance we saw on the field was pretty much something else.
What a fighting performance, Sonia. You know, he was flat down on the ground at select times, but he came back, he bounced back up. And I didn't know that on the personal front with regard to how he's combated depression. But what a fight. I mean, and people like us, we weren't there to see Kapil Dev in 1983 because we're not on the world. But, you know, this reminded you of something like that. India versus Zimbabwe in 1983, 17 for 5, and we came back to win it, led by Kapil Dev. And in fact, you know, everyone was calling it curtains for Australia yesterday. 90 for 7 and 201. Wow, what a stellar knock.
Looks like I missed a good match. I was on a flight yesterday, I mean, so got back pretty late. But anyway, you know, we'll catch highlights later.
And people would say, let's skip this match. You know, it's nothing so great. Australia's going to come out trumps. It was one of the most exciting matches. Prashant, I watched the entire innings.
We feel bad for Afghanistan in that sense. I mean, of course,
almost a knockout punch.
Yeah, you do. You do feel a little bad, but I mean, amazing cricket on the field, right?
Oh, absolutely. Well, you know, so that's cricket, and what's going to happen on the stock market field, right? That's the question we try and figure out as we begin another session. So let's lay it out for you in terms of what you need to know. So yesterday, the Nifty made a very strong intraday recovery. From the day's lowest point, the recovery was strong. Actually, you know, if you look at it, we managed to eke out a small higher high as compared to day before yesterday, although, you know, the average close was slightly lower. I'll come back to the Nifty in just a bit, but the global setup remains as strong as ever. Right after the FOMC, you know, we basically said that this is a significant shift in terms of what the Fed has said and what the Fed chair, etc., has said. And it marks perhaps the end of the cycle in terms of this hiking cycle we've seen. So that, I think, is the underlying driver behind this rally. The Nasdaq was up about 0.9%. That is what happened last night. So that's a strong gain, right? So we had historic hawks, people who sounded that, well, you know, the Fed needs to do more, etc., who all came out and said there were two gentlemen, Governor Wallace and Logan, who both were hawks, who are hawks, but sounded relatively dovish and neutral in their comments that they made yesterday. Now, bonds, I think, you know, at least last night, 7 basis point sell-off in the US 10-year was largely basis that. So we had the 10-year ended at about 4.57, and, you know, a bit of up and down, but roughly we're down about 50-60 basis points from the 5% levels, a little over 5% levels, and it's happened very quickly. The dollar, largely technical reasons, so nothing really fundamental, but that moved up a little bit, but we're still at about 105.5, the dollar index, that is. The big mover overnight is oil prices, right? Oil sold off 4% to just under 82. We're under 82 levels, and I think, I mean, this is Brent, but if you look at the WTI, I think that is now broken the 200-day moving average as well. So it does look like a pretty bearish setup. All of the war premium, all of the conflict premium, which is about $4 or $5, that is gone now out of oil prices. So we'll see. Lots of opinion out there that what's happening with oil and other commodities, etc., it indicates risk off. It indicates deflationary kind of a situation, but it's too early to tell. You know, but for a large importer from a macro kind of perspective, it certainly does help. There are lots of oil-consuming businesses as well, and, you know, we'll watch out for them. Now, just to come back to the Nifty and circle the levels in, we've got the Nifty, as I said, which managed to eke out a small higher high, despite a lower close that we had. Again, slightly lower close, but it was a very respectable, healthy pullback that we saw from the lowest point of the day. We ended exactly at the 20-day moving average, by the way. The 20-day is 19,406. We ended at 19,406.7. So exactly there. So that becomes then a bit of a pivot. The next resistance is 19,500, roughly 530, which is the 50% retracement. So, and then after that, you got the around 19,700 level. So 500 and then 19,700, which is nothing but the 50% and then the 61.8% retracement of the fall from the all-time high to the lows that we saw the week before last. Supports for the Nifty will come in around the 19,200 level. The move also has been pretty sharp. So, you tend to kind of leave any meaningful supports behind very quickly. So that's what we've done. So around 19,200 is where you should look at supports. Bank Nifty is now trading above its 20-day moving average, which is at 43,554. So hopefully that, again, it's very, very close by, but hopefully we stay above it. Next resistance, again, simple retracements. Come in at 44,200 and then 44,700 levels. And supports for the Nifty Bank come in around 43,200 or so, which is about 1% away. So very near term, sort of close levels is what I'm putting out as supports for both the Nifty and the Bank Nifty. The Gift Nifty will come up on your screen, and I think it's indicating another higher start. It's preferable if the market is actually lower a little bit. It spends a day, 2 days lower and doesn't in a breathless fashion continue to run up. It makes it that much more difficult to chase it higher because, globally, as we've been saying, the fog's kind of clearing. Maybe there will be more fog later down the road, but for now it's looking constructive. And this, as we've been saying, is a seasonally strong part of the year, the end of the year. So maybe things will continue to remain constructive and positive. So up on your screen, 40 points higher at about 19,500 plus this morning. Sonia.
Absolutely. I think, the going has been very good for the market, and that is something that can continue. The Gift Nifty is indicating a start well in the green, up about 43 odd points. The big cue this morning for me is crude. What's happening with crude? Crude prices are now at the lowest level since July, and now I think Brent crude has fallen to, okay, it's back above $81 a barrel, but the prices had fallen to less than $80 a barrel as well, which is a positive for the Indian market. So that, for me, is the biggest cue, which is, of course, positive. Also, the S&P 500 and the Dow have had a very long run. The S&P 500 has seen its longest positive run since 2021. The Dow is up for 7 straight days. So we have this stability across global markets, something that can take our markets higher. Domestic institutional investors have been buying. So yesterday as well, DI has bought about 700 crores in the cash markets, and the FI selling has reduced quite a bit. If you look at it, less than 500 crores of selling is what we saw yesterday. The important bit is a 20-day moving average of 19,411, where the Nifty halted yesterday. It paused, not halted, it paused, and perhaps it could sort of resume its uptrend and conquer that level. So that's an important level to watch on the upside. And we've had some really strong earnings. The earnings season overall may have been a mixed bag, but in the recent past, we've had very strong earnings, whether it is, names like L&T, SBI from the large caps. In the broader markets, the Alchem yesterday reported a really strong set of numbers. The export growth in the US is robust for Alchem, and it had a strong showing yesterday. So keep an eye out on that. The operational performance has been improving for a lot of non-index large caps, whether it's something like an Apollo Tyres, something like a Cummins reported solid set of margins as well. So I'll be keeping my eye out on many of these names. The implied opening indicating about a 40 points up move. So it looks like the going will be good today. Well,
that's right. So, you rightly pointed out that overnight the cues are positive. You have the dollar index has been fairly benign. You have Brent crude prices as well that are lower. And in fact, it's approaching $80 per barrel. So it goes to show yet again that Brent crude prices have failed at around that $95 per barrel. So that's good news. No worries on the global front. Yesterday, what played out? Well, the Nifty Financial Services Index, that played out weekly expiry. And that could have been one factor at play because both those two indices, there is a bit of an overlap out there. The Nifty Bank and the Nifty Financial Services Index, they made a bit of a move from, around 1 p.m. odd. And then we saw it around 2 p.m. yet again. And 3 p.m., they took that leg up out there. So that could be one factor that played out. But what's working for the bulls? I look at the institutional number as a net institutional number. That's the DI and the FI number. You put it together. And the last 4 sessions, that's been positive. So that's good news. The second factor is the FIs were aggressively net short. In contracts, the absolute net short positioning, well, it's come down from around 1.7 lakh contracts, 7.5 lakh contracts, to sub 1.5 lakh contracts. So there's a fair bit of shorts that have got covered out as well. And that's why the FI long positioning from only around 10%, that's moved to around 20%. Short positioning has come down to around 80%. The technicals are looking up as well. I'll tell you why. Because the Nifty corrected close to around 1,000 points, in that move from the 17th of October all the way to October 26th. And, then, in fact, we have seen a 50% retracement. That's a technical positive that 50% of those losses have been conquered. So good news. Nifty Bank, fourth straight session, we're ending in the green. Everyone's talking about the US markets being on an unbeaten streak. Well, the Nifty Bank that's been a relative underperformer, that's coming back in style. And it's conquered the 20 as well as the 200 DMA. So on the technical front, well, that as well is looking pretty good. What are the levels to track? Well, the resistance for the Nifty comes in at around 19,500, 19,550. And there are more reasons than one to say out there because, that's the low that we made post the breakout of the Israel conflict at around 19,480. While you also have the 50 DMA that comes in that vicinity of around 19,560. So crucial resistance out there. The support level becomes the recent resistance at around 19,250. On the Nifty Bank, I'm looking at support at around 43,460. That's because the 43,600 put was getting written yesterday. So that gives you the support. Well, resistance comes in at around that 44,000 odd mark. The GIFT Nifty suggesting a bit of a green start. I think you wait to buy the intraday dip yet again. And then, in fact, you look for the 19,500, 19,550 zone. That could be a bit of a resistance point. Let's see whether or not we can break out of there.
Okay, so big moves coming in this morning, 40 points higher on the GIFT Nifty at the moment, and lots of positives in the market, lots of individual stocks as well. So let's get straight down to it. By the way, keep an eye out on the Nifty Bank. The Nifty Bank is also coming back in the last couple of days. Yesterday was a good day for the Nifty Bank, so let's see whether we can build on to that gains today. But on the equities front, first up, we have Michael J. Wilson of Morgan Stanley, who says that over the past 2 months, both the US earnings revisions breadth and performance breadth have deteriorated significantly. He says until those factors reverse in a durable manner, he finds it difficult to get more excited about a year-end rally at the index level. Instead, he says they maintain their recommendations for a barbell of a defensive growth and late cycle cyclicals.
Well, that's interesting. He actually, in that note, calls it a bit of a characterizes it as a bear market rally, but more on that later. Let's get you some money market views as well. Now, this is coming through from Kunal Sodani of Shinhan Bank, who says that disappointing industrial production in Germany stokes recessionary fears, contributing to euro's decline and in turn dollar index moving higher. He says Brent crude prices have cooled off sharply, which remains rupee positive. He adds the 10-year US Treasury yield remains volatile. For the USD INR, he says 83.1 to a dollar acts as a support, while 83.29 is the resistance.
All right. On the bond market, Abhishek Goenka of IFA Global says the banking system liquidity is back to a modest surplus from a significant deficit. He expects the bond yields to correct further given the slight improvement in the global risk sentiment. However, a major focus shall also remain on Powell's speech today for further cues, and he expects the 10-year bond yield to trade between 7.25 to 7.31%.
Well, we've got a lot of stock-specific action track for you. We get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list. We're looking at Hindalco, Power Grid, Shree Cement, Cummins, Apollo Tyres, IRCTC, Deepak Nitrate, Vinati Organics, JB Chemicals, and Balrampur Chini. All of them on the back of positive news flow. And for today, in our Top 10 segment, we don't have any stocks that will be reacting to negative news flow. So let's see how this goes.